Welcome back. A growing number of strikes or potential strikes this summer are adding pressure on the Canadian and U.S. economies and could contribute to higher for longer inflation. For more on all of this, we're joined by our featured guest of the morning. She's Rebecca Teltscher, Portfolio Manager at Newhaven Asset Management. Thank you for coming in.
Thanks for having me.
So the headlines have been everywhere on this. So the market is looking at the auto talks in the United States nervously because there could very well be a strike in the U.S. auto sector. Here in Canada, one of our big grocery retailers had a strike in this area, not across the country, but in this part of the country. And everywhere, unions seem to believe it's their time to get paid, to catch up with higher inflation. What are some of the takeaways here?
Yeah, I mean, it's very clear that with a tight labor market right now, these unions have a lot more bargaining power than they did, let's just say, earlier in the pandemic. And with inflation creeping up as high as it has been, unions just want wages to now reflect these increased prices and increased inflation. And so we need, they're looking for wages to keep up with that. So I think it's very clear that we're going to see more labor disruptions going forward until we start seeing that increase in wages.
Do you believe that higher wages feed into inflation? I think the Bank of Canada believes that. We get pushback on that from labor-oriented economists who often say that wages are not a catalyst for further inflation. You should be looking to rising corporate profits as a driver for inflation. To what degree are wages part of the inflation story?
I think it's a vicious cycle. So, inflation has been high. So now employees want higher wages. And then in turn, the companies are going to try to pass those higher wages off by increasing prices. Those prices are going to lead to higher inflation for longer. And then that cycle just continues until something breaks, whether it's going to be the company that's no longer able to pass on the prices. So then they're going to have lower margins or possibly lay off employees. Or it could be the consumer that breaks by not being able to spend as much. As long as the wages are not keeping up with inflation, their purchasing power goes down. So this cycle is just going to continue until something in the market breaks, and then that cycle can't continue anymore. What should
investors be watching for in corporate earnings releases? Should they be watching for companies who are able to pass higher costs on to their customers?
Yeah, I mean, so for us, we definitely focus on essential needs. We feel as if companies that are providing essential services to customers are more likely to be able to pass off inflation as it's essential need, not so much as a want. So we are more focused on the essential sectors, less so on discretionary spending. And we've already seen that pullback in discretionary spending in a lot of the corporate earnings. So volumes are coming down, margins are lower. So we are seeing that change in discretionary spending with regards to certain sectors. So we're focusing more on the essentials.
How important can individual labor settlements be? There was a settlement with federal workers earlier this year that was in the minds of many people generous, and the thinking of some people was that this could lead to higher settlements elsewhere, and surely the auto talks are influential as well.
I do think that unions have the upper hand here, and I think wages are going to be higher. As a perfect example, Ontario teachers, their last contract that they signed was in April 2020, and they signed 1% increase for the next 3 years. Obviously, we know inflation's been much higher than that over the past few years. So now that their contract expired in 2022, they're going back and they obviously want more than a 1% increase. So I do think that wages will get higher. Whether it's going to keep up with inflation or not, that's to be seen. But I do think that wages will go higher from here.
Okay.